Why are some traders profitable? Now, it's simply because they have a strategy. Think about this. If there is something you can do 10,000 times well, it is way better than you having 10,000 different things that you can't do well. So let me explain this to you. You have a strategy for trading, you apply that strategy today, and then you make profits. Tomorrow it works, next time it works. I don't know if you get. But then if you have different things you are doing, that can be very, very challenging. And that is why most traders are unprofitable. So very few traders have a working strategy that they can work with, that whenever they apply this in the marketplace, they make profit. This is what this video is going to be about, and I don't want to make it so long. So I'm just going to focus on basic things, how you can frame the idea behind the trade with this simple strategy, the strategy of taking note of liquidity and key points. So it's simple. Price move from level of liquidity to liquidity. I know I'm doing a whole lot of talking, but let's get started. So before we get started, I want to take note of this. Take note of liquidity, key levels, equilibrium, and break of structure. Take note of these 4 things. So let's go ahead. For this study, the case study, I'm using USD card. So I like to use forex.com. They have an amazing chart. So starting from the monthly chart. Now, liquidity are resting orders at various highs and lows, or resting orders at significant highs and lows. Usually identify them on the higher time frame. So let's go ahead and do this together. So look at this now. This is a significant low. Watch. Just at this point, price, I want to use white. Price attacks this liquidity, clears this order, and then where is the next place price is heading to? To another significant point, which is a high. So from a low we move to a high, and from a high we move to a low. So you see, we've cleared the orders or the liquidity on the low. Now we went for the liquidities on the high, and we've actually done that. So accomplished. What do you think price is doing? Price is now coming for all the liquidities down here, and all the way here. So the funny thing here, or the amazing thing here, is that whenever price attacks a liquidity, this point becomes the new liquidity. So it's like taking away the card and then taking the position of that card. It's simple. So how do you think about this? Kill the king of a kingdom, you become the king. Something of that nature. I don't know. Okay, so this is our new point of interest. That is on the longer term. This is on the monthly chart. But then inside this price action, we have significant highs. They might not be clear to you now, but when we transpose to the weekly chart and daily chart, you will see why I noted them as significant highs. So you see all these points, they are all significant lows. Okay, this one's are significant lows. Then up here we have significant highs. Okay, so I think I just want to do this and then we'll transpose to the weekly. Just a moment. So let's transpose to the weekly and see. Now it simply means that if you want to trade within this period on the higher time frame, you're looking at a bearish order flow. So which means on the monthly time frame, we are looking at bearish moves. You understand? But that does not mean everything we're going to do is going to be selling or like taking a bear move. So let's go to the weekly chart and then we'll see more things. Okay, now look at this. You see these various points I marked to see how they are actually significant lows. Okay, so I want to start from here. After price cleared this liquidity here, now watch, we had a move. You can call it a random move also, but you see what I'm talking about. So after this move, we formed a high, a significant high here. So I will use another color so that I can get your attention. Use another color here. So look at this. Form the high here. Now randomly we also came back here again. So these are random moves. So these are the kind of moves I don't want to participate in. I don't want to actually buy or sell within this kind of period in the market. Yeah. Because price just went here, then came down here. No liquidity was cleared. So you don't know what they want to do. Okay. Now all of a sudden price went all the way up here, cleared the liquidity up here. What do we do? We're now looking for a sell. Now look at the idea behind this concept of liquidity. Whenever price clears liquidity or gets to a point where we have orders, it either retraces or reverse. Now what is retracement? Retracement is basically a temporal move. You understand? against the order flow, while reversal is a complete and permanent move against the order flow. So what happens? Price clears this liquidity and then we have a movement down, right? Okay. So from this very point, what happens again? We have another significant low here. So these are ways in which you can frame trade even on the even in the intraday or when we have consolidations. There's something I notice about trading. Sometimes when you have expansion moves like this, moving all the way up, people can actually make profits. You understand? Have expansion move. But in a rangy environment, like let's say having a very, very wide expansion, boom, people make profit. But in a ranging environment like this, people lose all the money and even more than they have made. And it's just something that will happen. But this concept of liquidity is going to help you stay far away from such experience. So let's look at this. Now, I plead with you to just wait till the end of this video. Like, this video has a whole lot in stock for you. You might not see that, but I'm promising you that. So let's see. Price came back here. You can still call it random. And now, why is price coming back random? So I'm going to give you a sketch of this. This video, I want to keep it as short as possible. I think further from now, the lessons I will make is going to be dependent on this. And I'm sorry for not being available for quite a long time. I am a final year student in College of Architecture. I know what it means to be an architecture student. And honestly, I was very, very occupied. I couldn't just do that. And I want to earn a degree. Like, honestly, I want to earn a degree. Okay, so look at this. Price moves this way. Up, down, up, down, up, down, up, down, up, whatever. This is when we have a bullish trend, right? This is a bullish environment. Now, you see that whenever we move up, we have a retracement. So this move oftentimes can even be smaller than this. Usually a small retracement, then an expansion up, then we have a small retracement, then an expansion up, usually big. So in a bullish environment, these moves are usually the bigger moves, the bigger moves, the bigger moves. Why these ones are the small moves. These are the small moves. They're usually the small moves here. Why these ones are the bigger ones. You understand? Okay. Every of this move coming down is a retracement. You understand? So we don't expect it to come all the way down here. No, that's not logical. So each time we go down here, we expect it to go all the way down here. So we'll just use our fib, knowing that, okay, that from here to here is this. So boom, equilibrium, we want to go up. Anytime we hit equilibrium, we want to go up. Okay, so let's just continue so I can just get you to understand this. So we went up, came down, you see this again. Now we failed to take this, fine, a retracement. Now price only pulled back. After it cleared this liquidity, what happened? We see price going all the way up again. So price went all the way up, clearing this new liquidity that was here. So that's the new point of liquidity. So you can see this price cleared that. After price took this, what happened? We retraced again. And after we traced, if you measure from here, from this very point all the way up here, see that we hit equilibrium. So once we hit equilibrium, what happened? Price goes all the way up again. So going all the way up, what's the intention of price? To clear the next liquidity here. So every of this liquidity here has been taken. And what's price doing again? Let's use this. From this very point to this very point, equilibrium gets hit. And then we'll have a massive run. Boom! Price goes all the way up again. So price going all the way up, taking every of the liquidity here. So from this very point again, let's measure and see equilibrium. So from here to here, you see, hit equilibrium. And what's the next plan? The next plan is for price to take away the liquidity here. So let me mark it out. So I want to see price hit this very point. Yeah, it's a very strong interest of mine. But what happened? Price came down here. I'll call it a random move. I can take this trade. So came down, came here, boom. Immediately price cleared this liquidity. What can we see? The high here. Went up, came here, okay, all of a sudden we'll see price taking the liquidities here again. Now remember, on the higher time frame or the bigger scale, I want to see price clear here. But right now, price takes this place. And what's the next point of liquidity, you think? This point and this point. And what can we see? Price actually came and took those liquidities there. So I know I'm just changing different colors so that I can take your attention. So these are points of interest. Now I want you to see that when price first came to this place, we had a small retracement, then went to the bigger picture. And immediately price cleared the liquidity here. What happened? Came all the way down, clearing this. And then if you use equilibrium from this very point to this very point, you see in fact price hits 50%. Okay, so right now my next liquidity is here. Okay, so this is my next point of interest. Now price hits this point, you see a retracement, and once price retraced, price cleared all the liquidities down here and then even here. Yeah. So what do we see? Boom, price takes this up, right? Okay, at this very point now, we see that price didn't really go down. It just kind of very small retracement and then continue. Now, what causes this kind of situation is when there is no break of structure on the lower time frame. Yes, that is when you see this kind of situation where price clears a point where there is meant to be liquidity and then it doesn't happen. Now, this is to say that this price action is, will I say, controlled. That's the word I want to use for it, which means price knows the last point where it attacks, where there are orders. Let's use the word orders. So price knows the last point where there are orders, and then price also knows that, okay, because there are orders here, this is how we can reprice those places, and then obviously we'll take a trade from there. Okay, so let's see transpose to a daily chart. You see, this is just happening. Now remember, this is the monthly targets. So price have actually gone to that point, and now see, once price went up on a daily chart, all the liquidities here, like this point here, was swept, and then price went up, then came down. Now remember, we've actually hit our monthly targets. So if we can find the daily break of structure, we should talk about going down. And actually, price have broken structure here on the daily. So from the monthly, I transpose to daily, looking out for a break of structure when I want to, switch my stance. Okay, so here, price goes up, and what do we see? Comes down. I want to see price take the liquidities here. Yes, it's going to be very, very necessary. So I want to see price take the liquidities here. So price goes up, go this way. So just kind of range your choppy action, and then price take this place, boom, we'll see a retracement. So from that retracement, let's measure from now. I know we are now bearish, no longer bullish. So let's measure from this point to this point. Boom, equilibrium will go down. So price have cleared the new liquidity that is here. So price takes this new liquidity. And what do we expect? We want to see price come all the way up again, right? Yeah, actually, we want to see price come all the way up. But then this usually happens when you don't see a clear break of structure. Yeah, so when you don't see a clear break of structure, it's not ideal that you want to see that. But I want to really see price come all the way up here, ideally. So you look out for this, but then a break of structure on the lower time frame helps you to confirm. And then there's something about price action. In as much as this is what you anticipate, you cannot force price to do that. Price will definitely go its own way. So that is why we don't just say, okay, boom, price have taken this, so we sell, we click buy. No, 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 no. You have to wait for a break of structure for confirmation. In as much as you know this is what is likely going to happen, you are not too certain. You can never be very, very certain. You understand? You can never be 100% certain. So I would say that this is the next point where we'll have liquidity here. So let me take this to this point. Yeah, this is the next point. We have liquidities here. This is the next point. Price came down here, a retracement. Let me see, because I think now you're very, very bearish, like extremely bearish. From this very point, yeah, this very point, price breaks. Wow, we just tapped equilibrium, boom, and we're already selling off. So from here, I want to see price come up again, but this place is looking choppy, so I want to see price come up again and then go down. So let's transpose to 4-hour time frame. Like this is just so simple and beautiful to do. Like it's simple. This is what is happening here. Price is moving from liquidity to liquidity. Okay, I see. I one time I used to follow a mentor who said price moved from fair value gap to fair value gap and some other PDRs like breaker block. I'm not here to dog anybody out or say they are wrong, but no, price moves from a point where there is liquidity, orders resting, and then to a point to offload or unload those orders. It's simple. These guys know the previous places where they left orders, so they have to attack people there, crush them, and then because this market is actually fashioned to defeat you, honestly. Yes, and you're going to see a whole lot of freezing here. I'm telling you, and that is why I don't have to be too sure for something or whatever, whatever. That's it. But let's continue. What I'm trying to say in essence is that price moves from a point of liquidity to another point of liquidity. And what are the points of liquidity? Where we have resting orders. Simple. Okay, so now on the 4 hour time frame, I want you to take a look at this. So look at this. Price came to this point, okay, cleared the orders here, moved up, and then boom, we came all the way down here. Okay, so I want to show you how we would have taking a trade here. Now remember, on the higher time frame, we actually bearish, very, very bearish. But then we can also buy using this strategy. So look at these very points. Price came to this point where you have resting orders because I don't like going less than 4 hours from my analysis. I don't like it. So price came to this point here. We'll have liquidities, resting orders here, right? Okay, so let's see how we can take advantage of this. So taking note of this part, I want to take note of this area so that once we transpose to the 5 minute chart, we'll not be confused. Okay, yeah. So we know that on a higher time frame, price have cleared liquidity. So if you come to this place now, this lower time frame, you see that we'll have some significant highs here. We'll have a whole lot of liquidities resting here above these places. Now on the higher time frame, there are just little retracements, but on the lower time frame, this is a trade for you. Like this is a beautiful trade for you. So price came to this point where we had liquidities, like liquidity, then swept liquidity. I remember whenever price come to this point where you have liquidity, either we see a retracement or a reversal, and this is what we want to capitalize on. And then before we click whether buy or sell, because you cannot just say, oh, price is at the key level. Now, these points are the key levels. All the points have been identified. That's why I said take note of some of the terms. I talk about liquidity now, key levels. So these various points I am identifying the high time frame are key levels. You understand now? So when price gets to a key level, you cannot just say, oh, I'm buying, oh, I'm selling. No, no. You have to wait for a break of structure. That is another thing, because sometimes they get to a key level and no reaction there, no retracement, no reversal, they just simply cross, boom. Yeah. And to me, I feel like when they do that, there is no order there. I don't know, and I don't claim to know everything here, but I just know that this is something you can do and that will make you profitable. And that's my interest. Okay, so let's see. Price came to this point, we'll have a high, right? Okay, so this is the high. Let's identify it. Okay, so this is the high. Now, price displaces upward. So this is a break of structure, right? So breaking structure, then from these very points to this very point. Okay, this is not clear. Let me use my fib. I just want to show you equilibrium. Yeah. So you see from this point to this point, low to a high, boom, price hits equilibrium. A good reason to take this trade. So right now you can actually execute from this very point because we've gotten to a key level, we've broken structure, fine. But then if you feel like okay, I don't really trust this first one, then here you have another opportunity. Just I don't like this one. So this high got broken here. I don't like it. I feel like this was the right place to broke structure if you don't like the first one. Maybe you are scared like me sometimes. I like a lot of confirmation. So this is a beautiful place to take this trade. So here and then from a low to a high, from this low to a high, boom, we have what? We have price coming to optimal trade entry region, so we can actually participate here. Okay, from this, sorry, from this is the very point. I'm actually skipped something. It should be from this very point to this very point. Yeah. So we come to exactly OTE level, and then we'll talk about going up. So let's say price comes to the 50%, and then you're already participating. Ideally, this is why you should keep your stop loss. Ideally, yeah. Yeah. This is why you should keep your stop loss. But there is more to this. And there is more to this. There is more to this. So here, this is where you should keep your stop loss exactly, and then you target upward. Now, when you do this, there is more to this. So I also employ SMT divergence. That is why you need to focus on correlated pairs. Don't just focus on pairs where I don't have that don't go in tandem. So focus on correlated pairs so that I can take advantage of SMT divergence and know the right one to trade. Okay, so let's say you take whatever. So what are we doing? We go for all the liquidities up here, up here, up here, up here, up here, up here. Okay. Now, this makes sense this way. It makes sense. But now, I can tell you that price might likely not get to this whole place. You know why? On the higher time frame, we are bearish, and now we are buying, which means we are going for a bullish trend. It simply means we are counter trading, and we don't need to expect price to go all the way up. So when you counter trade, you want to de-risk one, so you don't want to like put in a whole lot of money, and your risks to reward shouldn't be much. Yes, it shouldn't be much. It should be minimal. So a trade-off at most 1:2, 1:1 makes sense. But then the right place to put your stop loss is not really here. No, no, no. Or would I say the best place is here actually, but then this place also makes sense. The most recent low, yes, makes sense. Or because I don't want you to get stopped at, okay, wow, I didn't even know price got to this point. Boom. Well, actually, for me, I think from here, I wouldn't want to go further. Yeah, I wouldn't want to because I know I'm counter trading. Counter trading, yes. Well, price actually got to this place. Oh, beautiful, beautiful, beautiful. All of a sudden, then we started going downward. So this is how you can do this from a monthly chart, and all of a sudden you are going down to the daily. You can even do this and transpose to 1 minute. Like this is how I do my 1 minute, trading and whatever, whatever. So thank you so much for being a part of this. I'm going to do more lessons as regards to this. And please, on the comment section, if there's anything you don't understand, like, okay, I know I'm not talking about the times of the day as per London, New York, Asia, like, when does this kind of setup form? How can we take it? Like, I know you want more precision. I know you want so many things. Like, I know you want a whole lot. But can you go to your chart right now? Choose your favorite pair. My focus for this period of time is basically forex and then metals, silver, gold, copper, and then forex such as Aussie dollar, USD card, USD GBP, and all that. So for the meantime, I want you to go to your chart and look out for this. Starting from the monthly chart, identify key levels, look out for the point where there is liquidity, have price clear the liquidity, and then just just do exactly what I did now and try to see if it makes sense to you. I'm going to do more videos on this. And right on the comment section, I want you to tell me your mind. Like, I need to understand, do you really get this? Or do you think it's confusing? I know that I might not be able to explain this best to you until I know where you have a challenge. Yes, I understand this, so I might be explaining too fast or to the way it makes sense to me, but then I need to communicate this to you. So you tell me best how I can help. Yeah, exactly. And then I'm so sorry for leaving this beautiful community for a long time. Oh my god, I really missed everything about this community. Just doing my trading on low key, but no, no, no. I'm back and you're going to have a lot of amazing experiences right now that I'm back. So things have changed, yes, like a whole lot of things have changed, you know, so many beautiful things. And then you have a whole lot to learn within this period. You have a whole lot to learn. And the idea is not even for it to learn, the idea is for it to become profitable. So I'm going to keep building on this until you are able to this is going to give you a trade week in, week out. Bro, like week in, week out. You cannot just say, "Ah, I don't have a trade throughout this week." No, no, no. And when this comes, the risk to reward is usually handsome, like it's just so big and good. And I don't want to talk again. Yeah. So while I was away, it was simply because I was engrossed or occupied with my college work. Final year student in architecture, bro. Architecture, that's course. I can't say anything, but may God be the glory. That course is, bro, that discipline is not easy. So because of that, I was away from here, and actually right now, we're not learning. I'm not taking your time. I'm now taking your time. So have a nice time. Do where to comment, ask a question, and join me next time. God bless. Peace.